What's your take on what's going on with China and why the markets are just simply looking past all of these headlines, as well as looking past, or maybe not looking to, the elections enough yet?
Well, so I think to what Eunice was saying, it's more of a, gestures and theatrics on what's going on here. And I think the market's looking past that and sees that. The fact that, obviously we're looking at strength in the tech futures and the NASDAQ today, driven by earnings, but they haven't seen much of a pullback. And the Dow and the S&P futures are barely down. So I wouldn't read too much into it here as far as, the overall market picture is concerned. We're focusing on bigger things right now in the U.S. economy. And the big question here is, how is, do we want to stay in tech throughout this earnings season, or do we want to rotate towards more cyclical plays? And I think we're taking the view of the latter, that we're starting to this week rotate out of technology and some of these high growth areas into more of the reopening areas of the economy, and that will benefit from better headlines on the COVID outbreak.
So to that end, Paul, I mean, we're looking at Tesla and Microsoft reporting after the bell today. You've got Tesla trading higher pre-market in advance of the results, Microsoft slightly higher. You don't think that they're going to deliver and provide the results that investors need to stay invested in these stocks that have had mega runs?
Not that they won't necessarily deliver, but I mean, they've had very strong runs heading into earnings season. The tech sector, we talk about expectations being low heading into this earnings season. The pace of positive revisions to negative revisions in the technology sector, going back to 2009, there's only 3 other quarters where there were more positive revisions for technology stocks than there were negative revisions at this rate. So expectations are high. And when you see that expectations are high, you tend to see the market, see a little bit of a sell the news reaction to those earnings, like we saw with Netflix earlier in earnings season. So we'll see what goes on here. More of a short-term play than a longer-term play. Tesla, Tesla's up every morning, so in anticipation of earnings or whatever, who knows what the catalyst is. But I think the catalyst after earnings will be whether or not they report profitability, and that sets up the stage for possible inclusion to the S&P 500, which would be truly, a standout situation for a company so large getting added to the S&P 500. The only situation that's pretty similar to that is Berkshire in 2010, in late January. And from the time it became eligible in late January 2010, after its 50-for-1 split of the B shares, till the announcement and until it was added in early February, the S&P did fall 5% as portfolio managers had to make room by selling other positions in the index to make room for Berkshire. Likewise, you could see that sort of situation play out here for the broader market to make room for Tesla if it's added.